Hi, this is John with PDFtax.com. We have on the screen here Form 1120, the U.S. Corporation Income Tax Return. And this is the official government form that we're looking at. It was downloaded from irs.gov, and it's been enhanced in a couple ways. The most obvious one is the yellow navigation buttons that you see. These buttons are visible on the screen, but if you were to print the paper copy, they would not print. So you could actually use this to file your return with the IRS if you wanted to, since it's the official government form. The other thing we've done is we've added some calculations here. So if I was to enter 350 right there, that carries down automatically to line 11 for you, which is pretty nice. And so let's work with this a little bit to see how it works. I've created a fictitious company, Seattle Leather Works, and they make leather products such as leather handbags and that type of thing. So we've already entered the sales, so let's go to the let's enter the cost of goods sold, and to do that we'll click right here and take us to this form. And we're going to say that the beginning inventory is 4,500, and then the purchases during the year for the raw leather that is used to make the handbags is 62,000, like that. And then cost of labor, which is the salaries that are paid to the employees that actually make the handbags, is going to be 120,000. And an ending inventory is 6,000, like that. Then we have a couple questions here we need to answer. The inventory method is cost, which is the most common one. These two here don't apply, so we'll skip over those, and we'll say no to these because 263A does not apply to this company, and neither does this one because we didn't change the valuation of the inventory. So we'll say no to that one, just like that. Now let's continue with this tax return. Let's go to the navigation page and then back to page 1, and we'll scroll down to line 12, and we'll enter 90,000 for the compensation of the officers. Form 1120E doesn't apply to this tax return because the sales are less than $500,000, so we don't need to worry about that. But we do have some depreciation, and for that we need to go to Form 4562, which is this one right here. And on line 14 is the special depreciation allowance for assets placed in service after September 27th, 2017. With the new tax law, we can write off 100% of the cost of those assets, which is obviously pretty nice. So let's assume that this company purchased a tanning machine to be used in the process of their raw leather for their handbags, and they bought that machine in November of 2017. So if it costs $40,000, what we would do is we would enter 40,000 right there, and then the total would come down here on line 22. And if we go back again to page 1, we'll see that $40,000 right there on line 20. And now we have taxable income of $39,500 and tax of $59,225. Now we have some other options with depreciation, so let's talk about that a little bit. Let's go back to 4562, and let's assume that this company doesn't want to take all of the $40,000 this year because they want to save some of their deductions for next year. So let's take this 40,000 out of here, and let's look at this Part 1, Section 179. This will allow us to do that. And so first we'll enter the cost here, like that, and then we'll enter description of the property, which is a tanning machine. And the cost again is 40,000. And let's assume that they have decided they want to write off just 10,000 this year and save the rest of it. they want to save 30,000 for next year, but they also need to depreciate part of that this year through this maker's depreciation. So they got 30,000 to depreciate, but we need to know which one of these properties applies. So let's go to the instructions here for publication 946, and we need to find the recovery period for makers. So if we scroll down a little bit here, this one right here is what we want, the manufacturer of leather and leather products, and that is a 7-year recovery period. That's what we want. Let's go back here and then scroll back down, and so for 7-year property we're going to enter 30,000 right there. And since we placed this property in service in November, we need to select the fourth quarter. That will give us 1071 of depreciation. Added to the 10,000, the total should be 11,071 right there, like that. And then if we go back to the navigation page and page 1 again, there's 11,071. So now we have taxable income of 68,429 and tax of 12,107. Now there's one fairly important thing that we need to do with respect to depreciation. So let's go again to 4562, and you remember we have decided not to take the special depreciation allowance. Well, we need to explicitly tell the IRS that we're not doing that, because they require that, and if we don't do that and we sell the property a couple of years from now, the IRS is going to say, well, you reduced your basis by 40,000 because you took the special depreciation allowance, and that would give us a lot more gain if we sold the property than really we should have. So we need to tell the IRS that we are not going to take this allowance, and to do that we'll go here and we'll scroll down to 7-year property and look at the 100% bonus. We'll check this box to tell the IRS that we're not doing that. And if we go to the statement, this is what you get. You get the statement that says that we are not going to take that, and so that fulfills that requirement, which is pretty important. Now let's go back to page 1 again to continue with this tax return. We'll scroll down to page 2, and we don't have any dividends, so there's nothing we need to do here. And then on page 3 we have the computation of the tax. Our taxable income is 68,429 and our tax is 12,107, and that was carried forward for us to line 31 on page 1. We've already seen that. And then we have here Schedule K, which we need to spend a little time with. We need to select an accounting method, and accrual is the one we want. That's already checked for us. And then we need a business code. So let's go over here to look at the business code. For leather and allied products manufacturing is 316990. So we will go back to where we were and we'll enter 316990, and then we have a bunch of questions, and all of these are no. I've already checked them. They don't apply to this corporation. You can read through them if you want to, but they don't apply. But let's scroll down some more. All those are checked no. But let's look at question 13. Says, are the corporation's total receipts for the tax year less than 250,000? And we know that there's 350,000, so that's a no. And the consequences of that is that we need to complete schedules L, M1, and M2. So we'll scroll down some more. There's schedule L and M1 and M2. Let's start with M1. And if you remember, our taxable income was 68,429. So we'll enter that right there. And then on M2, we're going to assume that our beginning balance was 35,000, and our net income per books is the 68,429. So that gives us 103,429 for our ending balance. Now let's look at our schedule L, and we're going to say that at the beginning of the year, the cash was 130,500, and the beginning inventory, you might remember, is 4,500. So that gives us a total assets of 135, and we're going to say that we have capital stock of 100,000, like that, and our retained earnings at the beginning of the year are 35. That's from that schedule. That's from here, this schedule M2, 35. And so at the end of the year, let's see what we have. Our cash is going to be 168,500, and our ending inventory was 6,000. We also had an asset that we bought. So on line 10A, we need to enter 40,000, like that. But our depreciation was 10,071. So that gives us total assets of 203,429. So our capital stock is not going to change from the beginning of the year to the end, and our retained earnings is now 103,429. So let's put that right there, like that. So now we're in balance on our assets and our liabilities, which is exactly what we want. So that takes us to the end of the tax return, but let's look at one other thing. Let's go back to the navigation page, and right now we have the error messages turned off, but let's turn them on and see what happens. And we get this error message that says total assets at the end of the year, page 1, item D, do not match total assets on schedule L. So let's fix that. That's this item right here, and if you remember, total assets at the end of the year were 203,429 there. So that's that. So we're done. And if this were your company, you could file this tax return. So there you go. Thanks for watching.